Welcome back. 100 points higher on the Nifty. We mentioned in the morning that 25,350 and thereabouts will bring the index towards 25,500. We are moving towards that level, and the Nifty Bank as well. The second of the two levels that we have highlighted, 55,700 on the upside. Both of them now trading above those levels, and good going for both the Nifty and the Nifty Bank, powering along in today's session as well. So a good time to get in what the F&O data is indicating. Mangalam is at the F&O desk to tell us just that, Mangalam.
Well, the F&O data is indicating no different from what it was in the earlier few sessions as well. That the index is gradually moving higher, going towards important levels, and at the same time there is gradual short covering that takes place as well as the index continues to sustain at higher levels. So today we have the Nifty doing well. The broader markets are doing a shade better in terms of the market breadth, and it has been led by two engines, the frontline index, that is the Nifty Bank and the Nifty IT. And in doing so, the Nifty Bank, once it crossed the 20-day moving average, something that we had pointed out last week as well, it had a clear runway for a 1,000-point rally because we had the 50 and the 100-day moving average, and today it's gone ahead and crossed that also. So the Nifty has put up nearly 1,000 points from the lows. The Nifty Bank too has seen a near 1,200, 1,300 point rally on that index. The IT index, that too has been doing very well, and in today's trading session as well. However, there's a bit of a congestion that it's facing around the 100-day moving average. It crossed past the 100-day moving average today. 36,804 is where the 100-day moving average is placed. It went to over 37,000, but now is just slightly below the 100-day moving average. So we'll watch out for how the Nifty IT index, or whether it recovers in the second half or not. The only fly in the ointment that I'm looking at right now is the India VIX. As the index is gradually moving higher, the India VIX is now nearing complacency levels. It's sub 10, so that's something we'll watch out for. After a 1,000-point rally on the index, can we see some consolidation? The India VIX move higher as well, and some put writers also becoming a little more moderate is something I will watch out for, because despite the up move that we're seeing today, we're seeing call writers active at 25,500 and put writers active at 25,400. So the support of the Nifty has moved higher, and call writers believe that maybe closer to 25,550 to 25,600 is where some supply will come in. And in doing so, the put call ratio has moved higher from overbought levels of 1.22 to about 1.24. So the India VIX spiking and the India PCR, the Nifty PCR coming down, would be two important parameters to track whether the up move sustains or not. But a lot of individual stocks are fairly well bid today. We have Kfin, which has seen a lot of long positions being added. We've seen the KPIT tech stock fairly well bid as well. Mid-cap IT continues to do well, even as the large-cap IT index has seen a bit of moderation from the highs. And IREDA, that's the other stock, which is up 2%, with a lot of open interest backing it on the long side.
Thank you very much for that. Get into a break. On the other side, we'll discuss the market fundamentals. Mangalam was just telling us about this 1,000-point rally that we've seen. In fact, brokerages are turning more bullish. PL Capital is incrementally more constructive on the market. Risk rewards turn favorable, and now their portfolio has shifted from defensive to a moderately aggressive one. So we'll discuss all this with Siddharth Vora from PL Asset Management on the other side.